Good evening, everybody. Well, welcome to the trading session for Devon tonight. Tonight is an interesting night because non-farm payroll is out tomorrow. So we know news in the currency space can either help you to fly or crush you. And with that in mind, we just like to keep it real and let you know that not all traders are the same. And we're here simply to educate and edify as we go through our own process. I've been trading Forex now for approximately 3.5, close to 4 years. And it has been an interesting journey, to say the least. But I'm very excited about it. And we have a couple of students that normally hang with us in the evening times as we trade. And we just want to simply let it be known out there that, we love this thing called trading. And we're going to do this thing for a very long time. And it's a piece of my portfolio. And for those of you who are a little older and have kids and want them to participate on this journey, I know my kids are. They're 7, 11, and 23. And for them, they love dreaming big. So with that said, for them to purchase big, they got to start working early. So we thought there's no better way to make certain that the information gets passed down to each of our generations simply by teaching them earlier than most. And tonight, what we're looking at is a broker that I have with FlexiTrade. And we have 4 accounts that's up. And this is an MT4 account. Now, for those of you who are unfamiliar with the MT4, yeah, there are multiple softwares out there that can give you better stats and more advanced data and everything else like that. I'm still old school with MT4 in play, and I like it. And I guess the programming of it is a little bit easier for me because I spent a lot of time in the space. So I'm not one to change easily. So MT4 is the arena that I started out at, and I gravitated towards MT5 as well. And I do have a couple of MT5 accounts, and I'm loving every minute of it. So what you're looking at now is, let me see if I can get you to view a couple of different scenario charts here. This is a daily chart that you're looking at. And my process calls for us to have a plan. And my trading plan is real simple. I try to keep it as user-friendly as I possibly can. And I've kind of sort of typed it out for everybody in my group already. And I'll just go over what my plan was. And this is my plan. my plan is, oh, I guess I have to not show some private information from individuals in group. Okay, so there you have it. This is my plan, guys. So this is after 3 years of intensive forward testing and rigorous market observations, I've refined a Forex trading strategy designed to deliver the highest possible edge for me. This approach is built upon the discipline of monitoring of 3 primary technical variables. So yeah, you can say that I like technical trading. And the 3 indicators are the Williams percentage range, which is noted. Let me show you where I have mine, which is right here. And on the MT4 version, you could find it in the marketplace and bring it up as a chart. And that gives us the possible building strength of understanding if we are overbought or oversold. And if we are in the 0 to -20, which is the overbought range, we would like to have a tendency to sell in this position. So this is where I do my selling. And in this range between negative and -80 and -100, this is where I do my buying. Are there other oscillators out there that can do the very same thing? Sure. The CCI is one of them. The RSI is another. However, I'm just more comfortable with the Williams percentage range. And everybody got to fit their own comfortable piece of the pie into what you want to do. And there's multiple ways to roam. Not every way is going to fit for everybody else. So my process is that after I look at the daily chart, the Williams percentage range, it gives me an idea whether I want to be long or short. In this particular case, I'm going to assume that price action has started to incline so that when it gets in this area, I can sell my positions. So as you can tell, I've made multiple positions, multiple entries on the buy side. And I'm waiting for price to get into these zones so I can take the profits off. So I'm anticipating this price action to be positive in that direction. And that's, for in a nutshell, my Williams percentage range. However, I go one step further with the Williams percentage range. I would like to take a look at the hourly just to see where everything is. And on the hourly, is showcasing that I'm already in the overbought territory, and I'm willing to allow this thing to oscillate out of this area, even if it comes back down in this area to go back up. You'd find out that price action does some wonderful things with moving price from one arena to the next. And over time, you'd realize that you'd end up in a profitable position if you wait long enough. The type of trading that I do is swing trading. This is not a scalper's paradise for us, for those who like to just get in and out for that 10-minute, that 15-minute. Wrong channel. But if you're in it for a longer term holds, then this is a beautiful way to, not have too much anxiety to critically injure your psychosis of having a heart attack when you're in pullback, and the pullback is so large that it blows your account. So we want to trade safely. and conservative enough that you do well, meaning you still can double money every 30 days, 30 to 60 days in the space and still trade conservatively enough. So that's the type of trader I wanted to be after not getting sleep for many, many, many months. And at this particular juncture in the game, I'm now fitting trading into my life versus me fitting trading or me fitting into a trading lifestyle. As you grow in this space, you're going to evolve for a number of reasons, and we just take it one step at a time. So now that we're looking at the hourly, my next variable that I look at is the currency strength meter. So right now we have a currency strength meter underneath the, what they call GBP USD, which is the British pound versus the US dollar. And we see that we're strong on the upside. So once I see that we're strong on the upside, that gives me a good indication of a feel good that, okay, price is moving in the right direction. Now, my last variable, which is the signal strength indicator. I normally get that from the MT5, but I have multiple screens up and I like to simply go slow, right? And there are multiple currency strength meters. And let me go to screen 3 and share my MT5. Okay. This MT5, let me just bring up one here. Let me bring up the USD JPY. I don't have one here. Pull one. Marketplace. USD JPY. Let's bring this one up. Okay. Now we have multiple views on here. This is USD JPY, and I have it on the hourly chart. Because I get to see a little bit more detail of what I need. And what I need to look at is the signal strength meter for the currency, which tells me the direction of this pair, which tells me that the United States dollar is lower than the Japanese yen. And you can clearly see that the Japanese yen is sitting at 5.9 and the United States dollar is sitting at 1.6. Well, in many of those cases, price has a tendency to go down if the USD is lower than the Japanese yen. However, if the USD is higher, meaning if the USD is higher, then price have a tendency to move up. So those are the three variables that I look at for starters to help me in the analysis portion of what I do. And after I look at those, I then magnify in on the pairing itself to help me understand what direction I should take. There are some indicators that I have on here. These indicators with the numbers signifying 100% 61.8, 50, 38, 23.6. Those are my weekly Fibonacci numbers. So I have a tendency to use those as a guide. I like trading at the extreme reversals of the 100% Fibonacci, primarily because price have a tendency to oscillate down into negative territory of the Fibonacci, springing back into positive territory, and vice versa. So price does a number of things, and then at some point, I anticipate that price would go back into these zones here. And we can have a longer look at that to see what that looks like. But generally, let me see if I can show you a little longer view. Let's go to the 8 hours. Magnify it in. All right. So from here, you can see that price goes from the lower register of the Fibonacci. It climbs higher. And of course, that's market structure. However, at some point, it goes back into the lower numbers of the Fibonacci, springs back up. It then scales back into the lower registry of the Fibonacci, scales out, scales back in, lower registry, and consolidates for a while. But no matter what it does, at some point, it's going to scale back into these lower registries, whether it's this week or next week. That's the anticipation. And from what we can see, I like to trade at the 100% retracement levels. So I like here, I like here, and I like here. So those are the zones that I'm looking for retracement, and vice versa. I'm looking for retracement here, here, and it didn't happen again. So those are where I'm looking for the retracements. But as you can see, if I take a position here, I might have to wait for a while for a retracement. The retracement did come, but it took 1, 2 weeks, almost 2.5 weeks to realize a profit at this zone. However, once I realize a profit at this zone, I'm now looking at a push to go to the upside. So now this push occurred over a period of 2 weeks also, which got me all the way up here, which is very profitable, with the understanding that, okay, we're now at the 100% retracement. I now would like to start shorting this pair. You might ask me, well, what is shorting? We'll get into that later, but let's just understand the trading plan as it is so far in its simplistic form. So we don't have to make something so complex that we don't understand it. And we want to keep our trading plan real simple. Right? So, I mean, so to give you an idea now, and this is USD JPY. I want to give you an idea of what that looks like again. So I'll come to the day one. I'll enlarge it. For this, looking at the day one on USD JPY, I'm only interested in the Williams percentage range on the daily. This tells me that, all right, we're now at -37. And it looks as if price wants to come down, right? And I can do this assessment in 2 ways. Number one, we are already at the 100% weekly Fibonacci, and price at those intersections normally reverse. So I'm waiting patiently on the reversal, but I would like to go to the hour chart to look at where the oscillation of the Williams percentage range is. And I'll come over here to the 1 hour. Let me clean this up. Okay, so on the 1 hour, I can see that price was already in its overbought position. So, and you can judge for yourself what you see happen here on the hour. Price now is heading downward. Yeah, and I have a few indicators on here to help visually assess everything. And you can see that my simple bars is stacking on the downside. But whilst this is stacking on the downside, I don't make an assessment just based on that. My assessment is based on, okay, the Williams is already in the negative 80 to negative 100 zone. On the 1 hour chart, it's just operating as a magnifying glass for the daily chart. So this is going to oscillate in and out of these zones quite frequently. And it's my job to know exactly what side of the tape I want to be on. Well, I want to be on the short side of the tape. Why? The 100% range Fibonacci retracement is up here, and I'm anticipating a fall. Well, we look at the strength of the currency. We're showing negative. And if we were to look at the currency strength meter, let me show you what that looks like too. We will go back over to our MT4 where we have the currency strength meter. So this is USD JPY. The current strength meter is indicating that it's also negative, right? So based on what's going on here with the currency strength meter, I'm anticipating this move here. If it gets to this zone, that'll be great too. But at the end of the day, I simply don't want to be surprised. But if I am, I'm protected because my risk management is a priority. We're not getting into risk management tonight. We're just covering what the trading plan is like. All right, so let me go back to my MT5. Okay, cool. All right, so now we look at the Williams percentage range on the daily. We looked at the Williams percentage range on the hourly. We looked at the currency strength meter, and we also looked at the signal strength indicator. And it's all telling me that I should be short. And, you know, once I see a cluster here, I'm willing to take that probability that I should be short tonight. Okay, so with that said, I've already taken a couple of positions, and I'm simply going to wait on to see if those positions come in quite nicely. And I'm waiting, right? I'm waiting. And so the first part of our trading plan is to look at those three indicators and make an assessment. That's pretty much all you want to do with your trading plan at this particular juncture. Just make an assessment. And that's what we did. We made an assessment. And once you make an assessment, the rule of thumb is that you stick it out. but you always want to know where you're getting in and where you're getting out. And there again, I'm not a proponent to tell you that, you should invest, because this is not investment advice. This is simply showing you what I'm doing in my own trading journey. And if there's something that resonates with you, then you very well can join us. We do have invitations, but we like to talk to our students first. And I teach this thing for free. So there again, you can join us on that expedition as well too, if this is something that you are interested in. But make no judgment about trading. This is not a get rich quick process, even though some have used it for that. And I guess everybody who would master certain levels of this thing would go out and buy themselves a Lamborghini. And if that's you, that's great. But it's not the type of person I want to be, or it's not the type of trader I want to be. But for those who have that level of success, my hat's off to them, because they've mastered a certain skill set that the population of this universe deems as a very, very tough career choice. And it's not for everybody, because in this space, you would find out that 95% of the people lose money. And the numbers are high. I think these numbers are coming over from the prop firm challenges, that's showcasing how individuals are constantly losing. And we want to practice in a safe way. And we don't trade prop firms. We trade live accounts only. And with that said, we simply want to showcase the process. And if you're on your trading journey, join us as we simply discuss different rules, different strategies, and welcome to our space. I think we have a very safe space. We don't allow any and everybody in our trading club. And that's it for tonight on the first part of the trading assessment for our trading plan. And as we go along, we'll discover more and more things about our trading that we like, that we hate. And there are a couple of additional steps behind the first, understanding the first three variables. But the very first phase is simply understanding the three variables that we want as a technical analysis trader, and then take it one step at a time in the process. Well, welcome, and thank you guys so much for joining in. We'll tune in at a later time. Bye-bye. All right, Maldini, you can pause it. No? We still live? We still streaming? What? What a day, what a day, what a day. Well, it's nice to be streaming live. Today is September 4th, 2025. It's 10:01 p.m. And you can validate and verify these numbers for yourself. USDJPY is trading at 148.126. That's a good number. I see my technician is telling me that I need to keep rolling. Well, nonetheless, let's look around and see what else we can see in this space. Let me... I generally like to have 4 graphs up. so that I can take a look to see when price hits that 100% range. So if I'm to look at EU for me is considered not tradable. Why? It's not hitting the 100% range. Let's look at USD CAD. USD CAD hasn't elevated to the level of 100%, and as such, not tradable. Let's look at USD Chef. Hasn't arrived to the 100%, not tradable. So what does that mean? That means I just simply monitor and wait. So if it gets into these zones, those are the zones that I want to trade in. I try not to trade or commence my trade unless I see a strong push in the zone to whereby, okay, I might take a short in this position or a short here. And had I seen it, yeah, I may have been in a positive position by taking additional shorts coming down this side of the tape. But for the most part, we're just waiting. And since we missed this zone, we're just going to simply sit back and watch and wait. If price goes back into that zone, then we'll take a position. If not, we're just going to let it ride. All right. Let's go to the MT4 and let's let you guys listen in to some music whilst we sit and allow our positions here to cook. And to explain some of the positions that we have positions on AN, which is the Aussie Australian dollar versus the New Zealand dollar. And we have a couple of positions on waiting on this thing to fall. All right, so we're looking pretty good there. Let's see what else we got. We got positions on the USD. We're waiting on this one to fall as well too. So that's looking pretty good. And the British pound versus the US dollar, we want this to push higher. And that's looking pretty good. So we're sitting with all of these profitable positions. And I can't wait to see if there's a push going this way. Hopefully we can get a very good push tonight to whereby I can take my positions off before the non-farm payrolls occur tomorrow. All right, so now, and we have positions on the Australian dollar, Japanese yen, and we're anticipating a push to the downside. So we're waiting patiently on price to be entered in these zones. Keep it real peachy. In the meantime, we're just going to pause and play it one step at a time and just simply kick back and watch and see what our pip count is doing. So I placed a pip measuring stick right here. And as long as this goes blue, our account is then profitable. So we simply want this number now to go from negative 2,200 to positive 2,200, and that would be a good day. All right. But for now, since you're just getting to know me and I'm getting to know you, this now would be a step in the right direction for trading in the space. All right, so let me put you guys on mute, and then we'll turn around and simply watch this thing for a while. It's now 10:07 p.m. and it's September 4th, 2025. And let's see what happens the night before non-farm payroll reports go out.